Well, to tell us more about what's been making headlines in finance and economic news this week, we're joined by Suzanne Haddan, who is the Managing Director at BFG Financial Services. Good morning to you, Suzanne.
Good morning.
So let's start with Wall Street. The reaction to the debate yesterday was fairly muted. That focus, as Fauziah was saying, now squarely on those anticipated stimulus measures.
Oh, absolutely. So we have on one side, as Fauziah said, the Democrats looking for 2.2 trillion, and at this stage, President Trump only looking at 1.8 trillion. Either way, obviously, it's a massive number. But remembering, markets really dislike uncertainty. So they want to know, what is the plan? When is it going to be delivered? Also, obviously, the election will probably guarantee us some uncertainty in markets for the rest of this calendar year.
What's the market pricing in as to who will be the presidential winner?
Well, if you go by market donations for companies on the Dow, you would expect they're pricing in a Biden victory because he has been the recipient of more of the donations, whether that's just a hedge, just in case. But markets are okay with either, I think, long term, because what they look for is some stability. They also look for stimulus and what's going to happen with interest rates. And that's been declared to stay low for longer. So markets are looking pretty strong.
OK. Let's bring our focus now back home. It has been AGM season. A couple were making headlines this week. We might start with Crown, a fairly turbulent week. Shareholders there voted against 3 directors, delivering that first strike to the board. What does the future hold for Crown?
Well, Crown had a nightmare week. First up was the feared AUSTRAC, who are going to investigate them for money laundering. And let's remember, they are the regulator with teeth, and they've proven it, because with Westpac, they fined them $1.3 billion. So Crown are on notice of the risk there. Plus their chairman, Helen Coonan, fronted the Sydney inquiry on casinos. And the concern there is they'll be reporting in February whether they'll retain their casino licence. And interestingly, that one shone the light on the relationship between Crown and their major shareholder, the Packer family, who own 36% of the company, and the information flow between them. But it didn't stop there. Then they had one of their past chairmen, Robertson, who is possibly going to be prosecuted by ASIC for not reporting the risks to staff in China a few years back that led to some arrests. And then, as you say, we had the first strike. Now, what that means is shareholders have voted down the remuneration report. And importantly, if that happens at the next AGM, they get a second strike, it would spill the board members, and they either have to be re-elected or new board members put up. But let's bear in mind, they weren't the only company to have a first strike. There's been quite a few, and on the same day, Star Entertainment, the other casino operator, also scored a first strike. But it's a great concern for Crown because they need to retain their licences. And if they don't, that's going to be very bad news for the share price, which is already down 28.5% in the last 12 months.
In other company news, Qantas also reported yesterday they're potentially looking at establishing direct flights to new Asian destinations for the first time. I guess that leads us to think, are there travel bubbles on the way? Could the aviation sector be getting back on its feet?
Well, certainly it was good for some of the other share prices, like Webjet had quite a good day because they deal with booking those sorts of flights. We need to see some travel bubbles to revive this industry, and Qantas are obviously viewing it fairly enthusiastic from about Christmas, which would be great news for the tourism industry, as we know have suffered greatly over this pandemic period. So watch this space.
And just finally, Suzanne, some property numbers came out, a report this week. New South Wales prices gain, but no national recovery yet. Do you share that view, or what's your outlook on property?
Well, the issue with property is it's not homogenous. So you've got to look at all the different areas, because regional areas seem to be getting some enthusiastic purchase as people escape Sydney and prepare if they've got to work for home for longer, more flexibility. We've certainly had year-to-date property prices down in Sydney 9% and Melbourne, for obvious reasons, more at 14%. What's interesting is the amount of refinancing that's going on for home loans. We had a 27% increase in refinancing of loans year-to-date, and that's to do with mortgage stress, people having to extend their term, drop their interest rate or go to possibly interest only, but also people chasing some of these low interest rates. Caution there is, remember, we've got the Reserve Bank meeting on Melbourne Cup and rumours are getting stronger that the feeling is that they might drop interest rates further, which could be good for property prices and also possibly the share market.
Always good to talk to you, Suzanne. Thank you very much for joining us.
Thank you.